Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12 from T.S. Grewal's textbook 2023 edition. Accounting for partnership firms. Chapter 1, Accounting for partnership firms fundamentals. And in this video we will study questions related to adjustments for incorrect appropriations in the past or past adjustments. So let us see some questions from the textbook. Question number 72. Mudit, Sudhir and Uday are partners in a firm sharing profits in the ratio of 3:1:1. Their fixed capital balances are rupees 4 lakh, rupees 1,60,000 and rupees 1,20,000 respectively. Net profit for the year ended 31st March 2018 distributed among the partners was rupees 1 lakh without taking into account the following adjustments. Interest on capital at the rate of 2.5% per annum, salary to Mudit rupees 18,000 per annum and commission to Uday rupees 12,000. Mudit was allowed a commission of 6% of divisible profit after charging such commission. Pass a rectifying journal entry in the books of the firm, show workings clearly. So let us see the detailed explanation of this question in the solution. So let us see the solution for question number 72. First we will see the correct distribution. Because the firm has ignored the points given in partnership deed, so we have to calculate the exact amount for all the partners as per the partnership deed out of the net profit which they deserve. Fine. So net profit of the firm for the year is rupees 1 lakh and it was supposed to be given to the partners in the form of interest on capital. So the first part is interest on capital at the rate of 2.5% per annum on their respective capitals, which is fixed. So we need not to calculate opening capital because fixed capital account is there and therefore the capital balances are the balances on which interest on capital is to be calculated. So for your ready reference, let me tell you from the textbook that 4 lakh is the capital of Mudit, fixed capital, and 2.5% of 4 lakh is rupees 10,000, and then 1,60,000 is Sudhir's capital and 2.5% of which is rupees 4,000. 1,20,000 is Uday's capital and 2.5% of which is rupees 3,000. So out of rupees 1 lakh net profit, 17,000 was supposed to be given in the form of interest on capital, and this is the amount for the partners. And then the second thing is that salary was suggested to Mudit, that is the first partner Mudit, 18,000 rupees, and no other partner is getting salary, so the next 18,000 was to be given to Mudit. Then comes commission to partner Uday is rupees 12,000. So 12,000 in the form of commission. So how much have we given to the partners now? When you total this, it is 47,000. Fine. Out of 1 lakh rupees, 47,000 was supposed to be given in this way. But there is one more commission. Fine. This commission is to be given to partner Mudit, and as given in the question, it says that Mudit was allowed a commission of 6% of divisible profit after charging such commission. So what is the divisible profit? Divisible profit, that see, a net profit is rupees 1 lakh and this much amount has already been given to the partners. So now the profit is divisible profit, the remaining profit, that is 53,000. But here the question further says that after charging such commission, 6% commission, so 6 divided by 106. Why are we dividing it by 106? Because the question reads after charging such commission. So whenever such phrase is used, after charging such commission, you have to divide it by, we have to multiply it by percentage divided by 100 plus percentage. Fine. When you calculate this, you will get a commission of rupees 3000. So this commission is to be given to Mudit. Fine. So there are two commissions. First commission is directly given in the question. The second commission we have to calculate on divisible profit after charging such commission. So out of rupees 1 lakh, when 47,000 has been given to the partners in the form of interest on capital, salary and commission, the remaining profit is how much? It is 53,000, and 53,000 into 6 divided by 106, because after charging such commission word is used in the question. So it is 3,000. So you see 50,000 is given to the partners in this way. Now the remaining profit also we have to give profit, that is divisible profit or distributable profit, in their profit sharing ratio, which is 3:1:1. Now what will be the profit? Out of rupees 1 lakh, 50,000 has already been given to the partners. So the remaining is how much? 50,000. Now this 50,000 is the divisible profit, which will be given to the partners in their profit sharing ratio 3:1:1. So first partner will get rupees 30,000, second partner will get rupees 10,000, so will be the third partner. So this way the remaining 50,000 is also given to the partners. So this is the total account of net profit which is disbursed to the partners. Appropriation of profit. This is what profit and loss appropriation account tells. Fine. Now see, in this way Mudit was supposed to receive how much? 61,000 rupees, and Sudhir was supposed to receive rupees 14,000, and Uday was supposed to receive, I am grand totaling it here, rupees 25,000. So when you add these three figures, again it is 1 lakh. It means entire rupees 1 lakh has been properly distributed as per partnership deed. So this was the correct allocation of profit. But what the firm has done? The firm has done the other way. Fine. B. Wrong distribution. The firm has, by mistake, ignoring the partnership deed and giving this net profit to the partners in their profit sharing ratio, that is 3:1:1. So when you break this 3:1:1, first partner receives rupees 60,000 and other two partners have received rupees 20,000 each. In this way the net profit has been given to the partners. Now when we compare these two amounts, what they were supposed to receive and what they have actually received, we get the difference in amount which is to be adjusted as rectification. Fine. So here Mudit was supposed to receive rupees 61,000 and he has already received rupees 60,000. So 1,000, that is a positive amount, 1,000 we have to give to Mudit. Therefore his capital account or current account, in this case current account will be maintained because it is mentioned in the question that capital account is fixed. Fine. Here it is 6,000 rupees. Difference is 6,000, but it is negative. So whenever there is a negative, we have to debit that current account. And in this case 5,000 we have to give again more to the third partner Uday, and therefore positive figure, and therefore it is credit. So in this way we can find out the exact amount, and we can also know whether the capital account or current account is to be debited or credited. When it is a negative amount, the capital or current account as per the situation has to be debited, otherwise it is to be credited. So in journal we have to write Sudhir current account because capital account is fixed. 2 debited to Mudit current account, and to Uday. So being the amount has now been adjusted, you can write current account here. Now all the capital or current accounts of the partners are as per the partnership deed. So this is what the solution is. Now let us see question number 73. Pia and Bina are partners in a firm sharing profits and losses in the ratio of 3:2. Following was the balance sheet of the firm as on 31st March 2016. Now here is the balance sheet given. To the liability side, capital Pia rupees 80,000, Bina rupees 40,000. And to the asset side, it is sundry assets, it is 1,20,000. The profits rupees 30,000 for the year ended 31st March 2016 were divided between the partners without allowing interest on capital at the rate of 12% per annum and salary to Pia at the rate of rupees 1,000 per month. During the year, Pia withdrew rupees 8,000 and Bina withdrew rupees 4,000. Showing your working notes clearly, pass the necessary rectifying entry. Now here the balance sheet is given in this question, and the balance sheet is on the last date of the accounting year, that is 31st March. So these capital balances are closing balances. In order to give interest on capital, we have to calculate opening capital balances on which interest will be calculated. Fine. And because these are closing capital balances, and therefore drawings are also deducted from this. So we have to take this information to calculate opening capital balances. So let us do the detailed explanation of it in the solution. So solution 73 we will see. First we will have to calculate opening capital balances because closing capital balances are given to us, and in order to calculate interest on capital we have to go reverse and find out opening capital balances. So we will start with closing capital balances of both the partners are given in the balance sheet on 31st March 2016. It is 80,000 and 40,000. Now this figure has been arrived after deduction of drawings. So we will add back drawings. Fine. And drawings are rupees 8,000 and rupees 4,000. And profit is also given to them. Profit, that is rupees 30,000, has been given to them in their profit sharing ratio, that is 3:2. Fine. So 18,000 has been given to the first partner and 12,000 for the other partner. We will subtract it. Fine, because profit is already added to this, and we are going reverse, and so we will add subtract it. Now 70,000 is the total here, and here it is 32,000. Now this is our opening capitals. Now actually we come to analyze as first is correct distribution. Means the firm has failed to comply the partnership deed. Now as per partnership deed, partners were to be allowed interest on capital. Interest on capital. And at the rate of 12% per annum. 12% per annum. Now on 70,000, this is the opening capital. On 70,000, 12% is rupees 8,400. And on 32,000, 12% is rupees 3,840. Now you can add this. When you add, it is 12,240. So out of profit 30,000, 12,240 was supposed to be given in this way, in the form of interest on capital. Then salary is also there. Salary at the rate of rupees 1,000 per month to Pia. So 12,000 rupees is salary. So appropriation of profit in this way. And then the remaining divisible profit. Divisible profit is how much? See, 30,000 is the total net profit, and remaining profit is how much after deducting interest on capital and salary rupees 12,000. It is rupees 5,760. So this 5,760 is to be given to the partners in the ratio 3:2 as given in the question. So when you break this amount, it is 3,456 to the partner Pia and rupees 2,304 to partner partner Bina. So now we know how this 30,000 has been given to the partners. Fine. So Bina was supposed to receive rupees 6,144 and first partner Pia rupees 23,856. So this was the actual, or this is the correct allocation of profit to the partners. But we have ignored these points. So wrong distribution. In wrong distribution, what have we done? The firm has given this 30,000 to the partners in their profit sharing ratio. This way, the first partner receiving rupees 18,000 and the second partner rupees 12,000. So this 30,000 was given this way. That is improper allocation of profit, not complying the provisions or not complying the points given in partnership deed. So now when we compare A minus B, fine, the actual amount supposed to be received minus already received as per wrong distribution, we get the difference in amount rupees 5,865. But here for Bina it is a negative amount, but for the partner Pia it is a positive amount. So positive amount means we have to credit the capital account, and negative amount means we have to debit the capital account. So this way we can calculate the amount, and we can also know which account is to be debited and whose account is to be credited. Now let us pass the journal entry for this. So Bina's capital account debited, because capital account is fluctuating and therefore all the adjustments will be made through capital account itself, not from current account. To Pia. Amount is 5,865. Now, date can be 31st of March 2016. So this way you have to answer the question. Now let us see question number 74. Naveen, Kadir and Rajesh were partners doing an electronic goods business in Uttarakhand. After the accounts of partnership were drawn up and closed, it was discovered that interest on capital has been allowed to the partners at the rate of 6% per annum for the year ending 31st March 2017 and 2018, although there is no provision for interest on capital in partnership deed. On the other hand, Naveen and Kadir were entitled to a salary of rupees 3,500 and rupees 4,000 per quarter respectively, which has not been taken into consideration. Their fixed capitals were rupees 4 lakh, rupees 3,60,000 and rupees 2,40,000 respectively. During the last 2 years, they had shared the profits and losses as follows. For the year ended 31st March 2017 in the ratio 3:2:1, and for the year ended 31st March 2018 in the ratio 5:3:2. Pass necessary adjusting entry for the above adjustments in the books of the firm on 1st April 2018. Show your workings clearly. So let us see the detailed explanation of this question in the solution. So solution 74 we will see. In this, capital accounts are fixed, therefore the rectifying journal entry will be passed by opening current account. First thing. Second thing, the net profit for the both the years, year ending 31st March 2017 and 31st March 2018, net profits are not given to us. So, but some wrong allotments have been given to the partners. What is this wrong allotment? Is 6% per annum interest on capital. By mistake, the firm has given to the partners. Fine. So, interest on capital for both the years. Naveen's capital is rupees 4 lakh and recommended rate of interest means by mistake 6% per annum has been given to them. So on 4 lakh 24,000 for both the years, because capital accounts are fixed and therefore the same capital with the same capital amount interest is calculated. And Kadir's capital is rupees 3,60,000, 6% of which is rupees 21,600 in both the years. And third partner Rajesh's capital is rupees 2,40,000, 6% of which is rupees 14,400. So in this way we find when you grand total it for the first year it is 60,000 and for the second year also it is 60,000. So in total there is a mistake of rupees 1,20,000. So you have to understand here is that no matter what the net profit for the years are, the mistake is only related to rupees 1,20,000, which is misappropriated to the partners. Fine. So had this interest on capital be not given to the partners, this would have been allotted in some different way to the partners for the year 2017 and 2018. So let us see for the year ending 31st March 2017. Now this rupees 60,000 was supposed to be given to the partners in the form of salary first, which we have ignored. Salary to the partners, and this Naveen and Kadir will receive salaries, and given in the question 3,500 rupees per quarter. So 3,500 rupees into 4 is rupees 14,000. Fine. And the same thing will be repeated for the next year also, for the year ending 31st March 2018, salary to Naveen, which was supposed to be given by the firm, but the firm has ignored this. Fine. And Kadir's salary is rupees 4,000 per quarter. So 4,000 into 4, that is 16,000. Quarter means 1/4. So 16,000. Rajesh is not receiving any salary. So when you add this, it is 30,000 rupees for the first year also and for the second year also. Now we have to understand here is that the mistake for both the years in each year is of rupees 60,000, but we have salary which is amounting to rupees 30,000 only. So it is not balanced. Here it is 60,000, but here it is 30,000 for both the years. So the remaining 30,000 here is nothing but profit. Nothing but profit. See, 60,000 rupees mistake is there and 30,000 we have rectified, and the remaining 30,000 is to be rectified in the form of profit in profit sharing ratio recommended for that year, and that year's profit sharing ratio is 3:2:1. So this 30,000, now it is 60,000. Fine. Now this 30,000 will be given to the partners in this ratio. It means 15,000 and 10,000 and 5,000. Similarly, for this year also, the remaining 30,000 will be given in the form of divisible profit to the partners, and the recommended profit sharing ratio is 5:3:2. When you break this, it is 15,000 for the first partner, 9,000 for Kadir, and rupees 6,000 for Rajesh. In this way, we get the exact allocation of profit of rupees 1,20,000, which is for both the years, 60,000 rupees each year. Fine. So Naveen was supposed to receive how much? I'm blocking it here. Naveen was supposed to receive rupees 58,000 and Kadir rupees 51,000 and Rajesh rupees 11,000. Even if you add this way, you will get 1,20,000. Now we will call it A. These are the amounts which the partners were supposed to receive, but by mistake, due to confusion or whatever, ignorance on the part of the firm, Naveen has received only rupees 48,000. We will call this amount, a wrong amount, as B, and rupees 43,200, and when you add these two, it is 28,800. Now, in order to calculate the amount which is excessively debited or credited to partners, we will compare this A minus B. When you compare this, 58,000 he was supposed to receive and he has received only rupees 48,000. It means 10,000 more we have to give. It is a positive amount, so the current account has to be credited. So Naveen's current account will be credited. For Kadir was to receive 51,000 and he has received only rupees 43,200. So the difference amount is rupees 7,800. Similarly, for Rajesh was to receive rupees 11,000 and has received 28,800. So we will take back, it's a minus figure, 17,800, and therefore his account will also be, sorry, here it is credit, it is positive amount, only here it is negative, and therefore his current account will be debited. So in this way we find the correct amount and the correct debiting or crediting of the partners. Now when you pass this journal entry, their capital accounts or their current account will be as per the partnership date. So let us pass the journal entry for this. So journal entry on 1st of April 2018. 1st of April it is 2018. Rajesh current account. Rajesh current account will be debited, means we are reducing the current account because by mistake Rajesh was excessively paid by the firm to partner Naveen and to Kadir. Being adjustment entry passed. So this way the question is to be solved. I hope that you have understood this very well, and I know that you have watched the entire video and have understood the concept very well. Despite this, if you haven't got the concept and you are having any doubt, then please put it in the comment section. Thank you so much for liking, subscribing and sharing this channel. Thank you so much for watching this video.